Ladies and gentlemen, welcome back to my channel. And today we have market outlook for September 2021. And for the equity markets, sectoral change in the month of August has been for BSE IT, then BSE Energy Telecom. This and also oil and gas. These sectors have been advancing in the month of August, and whereas over here, uh, metal and reality, you see, these are negative. These two have been negative, and here in these two sectors there has been profit booking, and in these sectors there has been constant buying. That's why the price have been shot up. The advancement in price in these sectors. Let's go to the other one. Global index performance in the month of August, and here we have BSE, Sensex, and Nifty 50 have been performing 9.4% and 8.7% respectively. Nifty Midcap 100 and Nifty Small Cap, BSE a small cap, has been 0.5% and 2.2%. So if we compare our results with the rest of the world, we have Nasdaq and Jones and also S&P 500, and India has been performing better as compared to the other countries. Also we see Thailand, Shanghai, Russia, Japan, Taiwan, and in the previous month, this is of August, so in the August we have been advancing. Here we can see for these are the Indian indexes, Sensex as well as Nifty. So let's continue with our PowerPoint. Let's put this off. Here, equity markets have been buoyant. Why they have been buoyant? Because of recovery from COVID-19, pickup in vaccination rate. We almost have completed the first dose, and we have healthy corporate earnings growth and robust GDP growth expectations, and with liquidity. And also Indian GDP grew by 20% in quarter 1 FY22. Quarter 1 FY22 is of the June quarter. In one quarter there are 3 months, so this quarter 1 FY22 is of the June quarter, and there have been decline in India's COVID-19 cases. That is a good news. And increase in lockdown restriction led to pick up in economic activities. So easing lockdown restriction, that means some restrictions have been put off, and that had led to the pickup in economic activities. And as per the IMF, India's economy is forecasted to grow by 9.5% in FY22. So by FY22 means in next year our GDP growth will be 9.5. And RBI has also revised its CPI inflation, consumer price inflation, by 5.7%. The projection is like, if we say FY22 E means estimate, and estimate is given by projection. Projection is led by future expectation or calculation with the certain percentage in specific time period, boom, crisis, or offset. Here this kind of situations are considered, and we get projections. So the GST collected in the month of July 2021 improved to 3-month high of 16 lakh crores. India's manufacturing activity rebound to 55.3 in July 2021. So we have the quarter 1 FY22 earnings summary. In quarter 1 FY22, net profits of BSE 30 index grew by 63% year on year, and for Nifty index year on year increase in net profit was higher at 102%. Oh my god, 102% and 63% year on year. So on quarter basis, net profit for BSE and Nifty declined by 6.8 and 15.2. Yeah, this is acceptable because in business the same thing happens. Sometimes some quarter is profitable, some quarter is not possible, because 3 months you cannot judge how the company is going to perform there, or this quarter it may be performing in the negative, or there can be improvement in the next quarter or next 3 months. Then the national monetization pipeline. The government has unveiled 6 lakh crore national monetization pipeline to monetize brownfield infrastructure and assets over FY22 to 25. 4-year period is given. And we come to two-wheeler industry. BSE Auto Index has been underperforming the Sensex 30 and Nifty 50. In terms of market capitalization, a large auto-wheeler stock like Bajaj Auto are below the peak achieved in 2017. So only there is an exception to Bajaj Auto. Bajaj Auto has been performing very well this year also. It has given 15% growth in the price as compared to its peers. Okay, and when we have the outlook, the PLI scheme has improved and boosted the economy through implementations, and executions will be critical. So implementations in the sectors like auto components, pharma, food processing, air conditioner, LED, steel, textile would be beneficiaries over mid-term to long-term. So this scheme is going to benefit these sectors. Please keep in mind: auto, pharma, food processing, air conditioner, LED, steel, textile. Okay, so these are the sectors that are going to benefit from the scheme. Then we expect net profits of Nifty 50 index to grow by 31% in FY22 estimate. So FY22 estimate is the projection. Yes, I think this can be achievable, because in the previous outlook also I had given the projections, but you did not buy the Nifty 50 index ETF. If you had to buy, then you would have made straight away 6% and 14% in FY23 estimate. So in FY22 it will be 31% growth, and in FY23 we have 14% growth. So in FY2022 estimate, we expect banks and financials and metal mining sector to drive the significant parts of earning growth. So in FY 2022, metal and mining sector will again boom, or we can say that the earnings growth will be higher, can be seen, or we can see or observe this through the price growth also. Then the mid and the small caps stocks in August witness price correction and underperformance as compared to the large cap index. Such corrections provide investment opportunities in quality and mid cap stocks having strong growth potential and reasonable valuation. So we can have a strategy over here. They have said that witness price correction and underperformance performed the large cap index. So we have to pick mid cap stocks which have strong growth potential and reasonable valuation. The signs of third wave could put these sectors under pressure. So the signs of third COVID wave can put the sectors like aviation, entertainment, travel, hospitality, and leisure. So please keep in mind sectors like aviation, entertainment, travel, hospitality, and leisure are in danger if we see signs of third wave of COVID. Now, high spending by consumers during festival season could keep investors interested in discretionary stocks or consumer stocks. Since the broader market valuations remain rich, investors need to follow specific approach with high preference to large cap followed by mid cap. So here is the strategy. Since the broad market valuations remain rich, investors need to follow stock specific approach with high preference to large caps. So you have to give first preference to large caps, then followed by mid caps. So here nothing is mentioned about small caps. Please don't go for small caps, because here we talk about the situation and about the current market. So in the current market, it will be beneficial only for you if you go for large caps and mid caps. Now here we have the key risk. Now for the key risk of third wave of COVID-19 pandemic, which can impact economic and earnings growth projection. So rising inflation could lead to central banks rethinking the easy monetary policy. Currently the rate is the same. The rate has not been changed, and elevated commodity prices are risk to margins, earnings, and largely in manufacturing sector. So elevated commodity prices may appear to be a factor of risk for manufacturing sector. Please keep these things in mind. You have to keep these things in mind before you buy any stocks. This is especially for in the month of September. Rise in crude oil prices could impact economy and earnings in some sectors. Okay, so here we come to the end of the presentation. Thank you.